morning. You're watching The Market right here on ET Now with me, Aisha Faridi and Nikaj Dalmi in the studios, and we're coming to you live from the ET Now Motilal Oswal studios. The volatility in the market continues, and I guess that's going to be the way up until expiry. So once again, tested that 22,800 mark, and from there, saw almost a 150-point recovery, getting closer to 23,000 once again. It's really been a range that we've been playing with 22,800 clearly as a very, very critical pivot point for the index. But that said, what led us higher, it was really technology and oil and gas all the way in trade yesterday. But we'll talk about our markets and whether or not it's time to buy. What are the cues that you need to be looking at? First, let's address the US equity markets, because nothing there has changed. Even after a day's break, it was once again a record high for the S&P. Wall Street clearly shrugged off all the tariff concerns. The pharma leaders are now seeking drug policy changes as well. 8 out of 11 S&P sectors managed to close in the green, with any materials, they clearly leading. The 10-year yield in the US, that rose above that 4.5% mark. And yeah, once again, you're hearing all the tariff talk from Trump this morning, talking about how he's going to be imposing the 25% tariff on auto, pharma, semiconductor chips, and he's saying car plants are going to be built in the US. Companies related to chips, cars will return, won't let Musk partake in space-related issues. So that's what he's been saying when it comes to tariffs and making in the US. Also, he talked about what's happening with Ukraine and Russia, saying Ukraine should have never started the war. He's going to be meeting President Putin before the end of the month. He's saying it has been a long time since Ukraine had an election. Ukraine could have made a deal a long time ago. So could we really be nearing the end of the Russia-Ukraine war? That's something that Trump at least seems to be hinting at. Let's see which way it actually goes. So yeah, a lot of talking points when it comes to Trump every morning. I think we are back to those, Trump, his first regime, when you wake up and you log on to Twitter to see what all he's spoken about.
Earlier there used to be a single tweet, but now there is a series of communication which clearly is there. So one side, okay, there are two factors which are at play which we must recognize. First factor is that it appeared that the tariff, and at least what happened with Canada and Mexico, where the tariff was imposed and it was not implemented, no big number came on China. It appeared that the tariff imposed by United States would be a diluted one. But could that change? And that is what looks like is at play right now. Specific industries like pharma and autos were mentioned, and those industries in a sense are crucial to India and important in terms of stock market. First, let's understand pharma. Now, India, at least the large companies, the Sun Pharma, Cipla or Aurobindo, they derive about 25% plus of their 25% plus, in some case 30, in some case 35% plus of their total contribution, which is coming from pharma. Nearly 30% of the pharma exports for India are coming from US, and in that a lot of value added is actually coming in that 30%. So if tariffs are coming, it's bad news. But we don't know what could be the nature of tariff, because Indian companies are largely generic in nature. Could that come in generic companies? Could that come on only certain categories of pharma? So we don't know. But this comment and specific comment on pharma with the percentage number surely will set cat amongst the pigeon in the Indian pharma sector. Autos, Aisha, specifically, I think this is about China, I think. Why? Because Indian exporters, Indian auto companies do not export to US. They have minuscule presence there, with the exception of JLR, because JLR gets a large business from US. So 80% of the total business for Tata Motors is JLR. Within that, for JLR is 30% which is coming from US. So if tariffs and assembly lines are being changed, it is largely going to be for the Chinese companies and largely for the European companies. So I don't think indirectly it would affect us there. Pharma, you can argue back and say that, okay, will it be for Indian companies? Will it be across the board generic companies? Will generic companies be spared? My point is that in pharma, if you increase tariffs, it will be in pass-through, and the US healthcare system cannot digest that. That's my limited point. Second is, that's good news, which is that looks like we should sooner than later see a ceasefire between Russia and Ukraine. That automatically means that in the near term, the geopolitical concerns, at least across the board in the world, they seems to be simmering down. Impact on crude, impact on commodity, impact on global supply chains, all that would be encouraging. So there is a bit of a yes, and there is a lot of no. That's how I see the global positioning, simply in terms of events and in terms of the tariff communication.
Yeah, that seems to be the case. If you look at just the data points as of FY24, India's pharma exports, they stood at $27.8 billion, wherein US's contribution alone was at 31.3%, and this I'm talking about the industry average. The exports are maximum when it comes to drug formulations, which is at a staggering nearly 74%. Bulk drug intermediates at 17%, surgical equipments at 2.6%, Ayurveda and herbal products at 2.3%, and vaccines at 4.3%. So it's largely the drug formulations which will get impacted, if at all there is a tariff which is slapped. Excuse me. But let's talk about our markets. That staggering recovery that we had from that 22,800 print once again, so almost close to 100 odd points. We couldn't really pull up in the green, but we did manage to at least reach that flat line led by oil and gas and of course some of the technology plays as well. And I think the question everyone's asking now is, has the time now come to buy? Have we sold off enough? Is much of the negative already in the price now?
You'll have to really look at the market in terms of what cues it's giving. It's very difficult to say that, okay, this is it, because no one can really tell you the perfect market bottom. So let's look at the fundamental setup and the technical setup and the valuation setup. Those are three factors which you can say, because in hindsight only we'll find out whether 22,800 is a bottom or this will go down and there would be another low which could be made. So first let me address the real short term, which is that technically where do we stand. Let's look at the 1 month chart of the Nifty. Now you may call it double bottom, triple bottom, quad bottom, penta bottom, I don't know what. But 4 or 5 times Nifty in a sense has managed to find support in that, in and around that mean line of 22,800. So this now becomes like this big wall where in a sense markets are continuously taking support. So that's for me the first sign of where the strength is moving. That at 20,800 a lot of trade is now centered. You stay above that for a few more days, confidence to buy will come back in mid and small cap stocks. You go below that for even on an intraday basis, and if you close below 22,800 in the near term, that could lead to serious downside. So for the technical setup of the market, especially the hand-on hard trader and especially for the positioning trader, the importance of 22,800 is now immense. That's how I see the short term moving. Then you ask yourself the medium term. And in the medium term, Aisha, I think it's not looking scary. Valuations are tempered down. Macros are getting better. The rate of change, which I always speak about in coming months, is going to be better, both in terms of economy, in terms of earnings, and in terms of capex. So if you really want to chance your arm and you have a time horizon which is beyond a year, I think this is not a bad level where you should not be buying large cap stocks. But in the near term, I think this whole support around 22,800 is crucial. You stay above that, then markets will start rebuilding a base, but you go below that, which you may for external factors or internal factors, then you would say that that will lead to some more panic unwinding, because markets are very nimble right now. You know, nobody's thinking and selling. And with each level, when markets are going down, more and more, you know, more and more hand-on-heart traders are throwing in the towel. That is a problem for the market. Nobody wants to buy, everybody wants to sell. And I think that may stay true for small and mid-cap stocks for an extended period of time. See, Aisha, you were here, you've come down here. When you go up, everybody would like to convert their portfolio. You know, jo bhi milta hai lekar ke large cap mein chale jao. I think that phenomenon is at play.
Yeah, that flight to safety towards large caps definitely is bound to happen. And that's pretty much the noise that we're hearing from across market experts. But yeah, the good thing about, you know, all that Trump has said overnight, and especially his talk on Ukraine and Russia, that could have had a bearing on crude, and that's going to turn out very positive for India. Bank of America has already come out with a note saying that Ukraine peace talks could actually sink Brent by a good $5 to $10 per barrel. He's saying that they see a fall if Russian barrels become unsanctioned. Sanction relief could depress refining margins, and there could be a $10 per barrel fall, which could disincentivize US drillers. So that's their range for crude, wherein they see it dipping by a good $5 to $10 per barrel, which of course is going to spell good news for India. But yeah, like we talked about, the strategy pretty much seems to be the same. We've flagged off what most brokerages are saying, and they do believe that a bottom very well could be near. They're also talking about as to how one needs to keep their biases toward large caps, and that it may be a little too early to start buying mid and small caps. For mid and small caps alone, specifically, I believe it's going to take some more time for a meaningful recovery, or at least even the selling to abate, because I think you're going to sell your mid and small caps, take that money and move it to large caps. That portfolio juggling will happen.
See, Aisha, when you buy a stock, it's about confidence, it is about opportunity, and it is about
safety.
Safety.
Most importantly,
safety.
Right now.
So confidence, safety, these are the factors you look at it. Mid-cap stocks have turned volatile. So the safety and safety is gone. Direction has turned, momentum is gone, valuations are still stretched, and the desire to participate is just missing. That is the problem. And why, you can only talk about mid and small cap stocks where you know that where large cap stocks are headed. Unko to dekh lo pehle. You don't know where they are headed right now. First, the big boys which are cheap, where valuations is there. If till the time they don't become attractive, you cannot make a sense of how much more small and mid cap stocks would move. I expect 80% of, or at least if not 80, 60 to 70% of mid and small cap stocks to do nothing this year. 15-20% will go higher, and 15-20% even from these levels will go lower. That's a very generic kind of a view, but it is like that. I mean, you cannot look at mid and small cap as a classification, but as a cluster. We'll talk about mid and small cap stocks when we know that where large cap stocks are actually headed.